Bhatnagar, and I'm with you with the area of ABFM. What are we doing? We had been dealing with Module C from quite a long time. In the series, we are coming up with the next topic, that is the revision. I think this is the second class for revision. Till now, I'm done with the entire module C already. So all the chapters had been covered sequence by sequence. One of the most important things to do is please go ahead and like this particular session, everyone. That really brings up that motivation ki yes, my work is being recognized and is being seen by all of you. And if you really like the sessions, then please go ahead and share it as well. Sharing and at the same time liking the sessions, two basic things without which it is very difficult to move forward, right? So please go ahead and do the needful. Now, everybody, what are we dealing with? In terms of module C, I've got all the MCQs of the entire module C altogether. So let's look forward to it. Acha, and one more thing. The entire playlist is also there. I think 12 classes of each of these is there. So please just go ahead and review the entire playlist there, because this will be really helpful for you in terms of your examination, right? Hanchi, done everyone? So let's move on and talk about this particular topic. What is the primary focus of the market approach in corporate valuation? What do you mean by market approach, everyone? The term market approach is related to the area of parity with the market. That means the market value, the current market value, not the future or something, determining the value based on recent transactions or comparable assets, or estimating the worth of the business by comparing it to a similar business sold recently, evaluating the present or calculated current value of the evaluated expected future earnings or cash flows, or last is extracting value by combining FMV of the assets. What would be the point, everyone? Any ideas? What would be the answer? Chaliye, then let's try it out. The answer to this question is determining the value based upon the recent transactions and comparable assets, because we want to know the value as per today, right? This is what we would like to know, because current is basically the current situation. So we would like to know things as per the current scenario, because market value is prevailing. How can current replacement cost we can be modify the book value of the assets? See, if the current price change is such a drastic one, then how can we continue it the same manner? You know, that's one of the basic things, na? The replacement cost is subtracted from the book value. The replacement cost is added to the book value. The replacement cost is used in place of net book value, or the replacement cost is ignored in terms of is ignored in the valuation process. Actually, everyone, when you're talking about this part, now there are a few things that we really have to look forward to. Current replacement cost is the cost if I just switch it over and I replace it with something else right away, but the point is, if the replacement value, if the book value has become so scrapped, or you can say it is something which is just not standing in front of the realistic value, then we don't have any other option than taking it to the replacement value, right? So what will we do in this case? We will try to find all this situation, we will try to adjust our book values to the realistic figure, because ultimately the realistic figure is way more important. If the realistic figure is not recorded, then things are really wrong, isn't it? So the replacement cost is basically the one which is related to the area of book value. We actually replace it. Pata hai? In this case, we have a replacement. It is basically, if we are recording something at the book value, we won't continue with the same book value at all. Then everyone, so we would be recording it on this basis. So the value, the book value, which is definitely something which is no more useful or has become unrealistic, so we'll switch to replacement costs. Then what may be the disadvantage with medium to heavy borrowings? Heavy borrowings matlab high rate of interest, है ना? That would be the point. If we have a specific issue like that, then what will happen? Lower interest rates is not the thing, then definitely better credit rating. The more the burden is, the more we become more questionable on a genuine note. Because it's like, if you have taken too much of loans, and you have to show your credibility कि हाँ जी we earn enough कि ठीक है we can pay the money. Next is hindrance in decision making. In terms of borrowings, we would want that there is no hindrance in the process of decision making, and we have higher profits. वैसे तो पता है, when we talk about hindrance in decision making, the point is, when you earn too much and you have taken a lot of loans, then you are answerable as to how you are spending. If we take a loan of a major amount now, then the debenture holders have the right to bring up a nominee director. This nominee director does nothing, but he just makes sure that the money given by the debenture holders is not wasted, or is not used or in an undue manner, or is not exploited. So in this case, it may be a disadvantage of companies with medium to heavy borrowings that you cannot take decisions with your own with your own independence. You will have to consult a lot of people, and they should not be annoyed, because if the person who has given you loan is annoyed with you, then why would he give you loan, है ना? So that can create a lot of fuss among the entire people who are working with you. So hindrance in decision making is basically, the information mentions that the heavy borrowings are rated a few notches below than with no or low borrowings, which may hinder the management decision making process. How can they take decisions when they have taken a good amount of loan, and always the people from whom they have taken the loan, they are after their lives? You, by what time you are paying the loans, how are you paying the loans, everything has to be stated, na? Acha. Next is what principle is the direct comparison approach founded on? Principle of equity, principle of proximity, principle of substitution, principle of continuity. Equity means, acha, always remember, equity does not mean equality. Equity is not equal to equality. Equality means, if I have okay, if my height is 5 feet and 4 inches, and there's someone who is 6 feet and 4 inches. Among us, who should be given the specific ladder to go to a specific height? This person who's already 6'4", if him and I are given the same stool, then for me it is going to be a challenging thing. For him it is going to be a very, very easy thing. Why? Because of the height. So what should be happening is, I should be getting a bigger stool so that I can reach out to the particular place easily, and he should be given a smaller stool so that he can actually reach out without bending down or hitting his head somewhere. That is equity. You don't give the same thing, but you give the thing as per the requirement. Is it the direct comparison approach? No, it is based upon mutual concerns for each other, है ना? Principle of proximity. Proximity is what? Approximate. We don't know the actual thing. That is principle of proximity. Then principle of substitution. Substitution means what, everyone? Substitution means one thing replaced by another. And then is principle of continuity. When we talk about direct comparison approach, the point that can be taken here is principle of substitution. One thing being substituted by the other. Principle of substitution is the answer. Acha, next question is ABC Corp is a new project with an initial cost of 15 lakh. Okay, $15 lakh. The company plans to finance the project by 50 and 50%. Matlab, there would be 50% debt and 50% equity. 50% debt and 50% equity. Debt and equity. Done. The cost of equity is 12%. That means debt is 60%, 50% of debt. Matlab, okay. First of all, let me tell you the particular method. Then I'll solve it. Weighted average cost of capital is equal to cost of equity into weight of equity plus cost of debt into weight नहीं cost of debt and this is the weight of debt. ठीक है, so this is equal to cost of equity is 12% multiplied by 50%, the ratio of it, plus 6% into 50%. This is how the particular WACC is calculated. Matlab, we are taking things on the basis of weightage. It's just a coincidence here, the weightage of both the things is the same. So technically you just have to half the weights and you will get the answer. For example, this will turn out to be 60, this will turn out to be 3, so the total comes out to be 9%. Then everyone, the answer should be 9%, 9.5, 10 or 10.5. The answer is 9 or 10. 6. It is 9. 50% now. 12 into 50 is 6 and 6 is 3. It should be 9%, not 10. This is wrong. The answer is 10. Not 10 but 9. In this case, we have 15 lakh to be included in it. The weight of debt and equity is given. It has to be 9. Which discounted cash flow discounts the unlevered unlevered equity? Unlevered matlab without even a single loan on it. Equity cash flow at an unlevered cost of equity and as a discounted value of the interest tax shield on the debt. Matlab, if this particular part of leverage is not there, what is the amount that we are earning? And then we use the interest as an expense to cry in front of income tax department ki hi I am paying in such a major expense, give me some relaxation on it. That's what they want. Now the answer is enterprise DCF model. Enterprise the equity DCF model, discounted cash flow. Then we have adjusted present value, APV, or dividend discount model. What's the answer? Which discount cash flow model works upon the discounted cash flow? Everyone? Discounted cash flow is basically based upon adjustment of the present value. So related to the adjustments, for the adjustments we have adjusted present value. Adjusted present value is basically a model which discounts the unlevered. Unlevered matlab there are no loans. Unlevered equity cash flow at the unlevered cost of equity adds to the discounted value of interest tax sheet on debt. Hanji, done everyone? Okay everyone, next question. This is a reasoning and assertion based question. The reasoning question says the relative valuation matlab comparatively are particularly useful when it is challenging to quantify the absolute value of an asset directly. Reasoning is relative valuation involves comparing the asset's value to the prices of similar assets in the market, providing the benchmark based on market's perception. Relative is simply comparing. ठीक है ना? Sometimes you want to know where do you stand in the market. So you compare yourself with the market and then we try to find out where do we exactly stand. So this is true and our reasoning, assertion and reasoning are both correct, or true but R is not correct, false but R is correct, but last is false and R is not correct at all. We talk about relative. Relative is based upon comparability. Everyone, relative, the word itself says it is based upon the comparability. So in this case, what's going to be the answer? The answer is going to be A only. True, and R is the correct explanation of A as well. Done? Next question. Question says, what is the value of an asset proportional to when all other factors are held consistent? Uncertainty of cash flows, the risk of associated with the cash flows, then the volume of the cash flows, growth and the level of risk associated, and the expected growth. I think I'll go for C. In this case, we get all these things. Because yes, we are worried about the cash flows. See, systematic is the risk of your own market. है ना? Unsystematic risk is when you go and try into their market. Everybody, the volume of the cash flows, the volume of the growth, and the level of risk associated. These are the things that determines the valuation overall, because you are considering a lot of external factors, which is required. Done, everyone? Next point. Which one of the following is an estimating the value of intangible assets such as brand names? Brand names is market comparison. We don't compare with the market. Capital investment, revenue discount, or barter system. Barter system is there, but not in case of real. मतलब barter system was there in terms of when there was no money involved. Up to barter doesn't really exist that way. Again, that is one particular truth. But this still there in terms of capital investment decisions. Why? Because when we say capital investments in the era of intangible assets, when you build up your reputation, that is where you have that candid moments. So that is where when they talk about the intangible assets are basically those assets which are basically open towards that industry and they are attractive. That's why people move towards these areas. So this is the point. Done? Market comparison. Which one of the following is used in estimation of the intangible assets such as the brand name? Market comparison, capital investment, revenue, or barter? The answer is capital investment, everyone. Done, everyone? Next question. What does the PSU disinvestment involve? Public sector undertakings in 1991 went through a lot of problems. They were supposed to go through it because they were already in a good amount of losses. So, a strategic investor or a public buying or a portion or of a parent company. This was a part of disinvestment, a sale of the business division to another company, the transfer of ownership between two companies, or the demerger. The disinvestment means you are opening up your industry for others, right? In this case, an investment or buying portion is of the parent company. If they're looking forward to it, then they are really huge in terms of the working. That's why they are looking forward to such big plans. Anna, so these are just an example, of course, in the book. Acha, everyone, the sale has begun. If you haven't enrolled yourself yet, then please do not wait. Just open up our courses. This is what you will find. Uh, Let me just take you to our website where you will find the entire portion. Go on to the area of www.adda247.com. Okay, so first of all, go to our website, that is www.adda247.com. Click on this area. Go on to this area, go on to the area of JIB and CAIB. Go on to the area of JIB and CIB, go on to the area of CIB June 2024. You will find the Mahapack where the double validity is going on. All you need to do is use the code Y541 and buy the course, and you will get the specific course at a very less price. Just click on this particular course, and even double validity is available in this case. So we have got the code Y541, and when you apply this specific code, then you can get 79% discount. Utilize it on your phone, you will get 80% discount. So get this particular benefit for your family, right, or yourself. So thank you so much everyone for being there. We'll be discussing all the particular questions of module C by tomorrow then. So thank you so much everyone. I hope you could review the particular course, and if you're interested, then kindly check it out on our website or in our app for further details. Thank you and bye bye.